and welcome to Business Today. I'm Siddharth Zarabi, and joining me today is Anant Goenka, Vice Chairman of the RPG Group, and someone who has just taken over as the President of the Federation of Indian Chambers of Commerce and Industry, one of India's oldest industry chambers. And Anant, thank you very much for joining us. Congratulations for this significant responsibility that comes at a time of considerable external turmoil, trade tensions, yet an economy that is surpassing expectations, growing at the rate that it most recently did. Your first thoughts on the state of India's economy?
Very strong point on the Indian economy. You look at the macros, if you look at what are the risks really that are ailing Indian economy, there's very little. Inflation rates are low, fiscal deficit is in control, overall everything going fairly positive. On top of that, growth rates are strong. The only change that we are seeing in the last few months is the intertwining of geopolitics and economics, and I think that is something where we have to tread carefully as business. Supply chain security, availability of critical minerals, and being agile with respect to key export markets is something which we as industry need to keep a close eye on and take forward.
Anant, for the benefit of our viewers, how would you describe the response of, India incorporated in a way to these tariffs? 50% is no laughing matter, yet you've seen the policy response when it comes to successive policy moves, whether it be GST, Labour Code, and we'll talk about that later on. But overall, what is the mood of India Inc. when it comes to this geopolitical disruption of sorts that has been imposed on us quite unfairly?
So in the first half of the year, I think it was a year of very high uncertainty. Every day we didn't know what was happening. We tried to forecast, change our forecasts. And then over time we realized it is just about being agile and living day by day and being very quick in terms of changing ourselves to the changing economic situation. If you look at the impact of US tariffs particularly, a few industries have got affected. Gems and jewelry, textile garments, marine and shrimp exports. I think post all of this happening, these industries have done an excellent job in diversifying beyond the US. Except for garments that has got affected, the others have actually seen a positive increase in exports despite the challenges coming in from the US. So whether it is an impact of FTAs or general diversification that Indian industry has adopted, it's been fairly resilient in light of US tariffs.
Would you, as FICCI President, hold out a case for government support and intervention for some of the sectors that have been negatively impacted on account of the US tariffs?
We recently had the Commerce Secretary addressing us at our FICCI AGM, and he shared that hopefully a deal is around the corner. Most of the negotiation seems to be coming to a close. So I'm hopeful that before even any measures are announced, we have some kind of an agreement between the two countries. If that were not to happen, I would say we have to look at protecting particularly those specific industries, as well as more on that in the MSME space. So there, as FICCI, we would recommend some kind of incentive measure or subsidy measure to handhold these industries till an agreement is done.
Fair point, and we'll see how that trade-related development pans out. In any case, in a couple of months, we have the Union General Budget, and we'll see what kind of further policy responses will come. We'll come to some of the other industry-specific issues, but since you spoke about that, how significant would you describe India's current ongoing negotiations for free trade agreements with other economies? For example, the European Union. We are at a pretty advanced stage. As of last count, there are perhaps a dozen and a half conversations that are happening, and the UK deal was already announced. How pivotal and significant is it for Indian industry? Because this is happening, Anant, as you well know, after several years of a kind of slowdown on global trade engagement.
It's very important for Indian industry to have more opportunities, stronger relationships with key large economies around the world. I would say, particularly the developed world, there are a lot of complementarities that are there. India has skills, India has people. Some of the developed world has technology. So I think on both sides, uh, an agreement would be very useful. We have seen a big shift in past FTAs. If you look at FTAs 10, 15 years ago that were signed with Japan, Korea, they have really not resulted in large relationship, at least from India's side into selling into Japan, India's side selling into Korea, whereas the other way, there has been a fair amount of exchange or import or setting up of industry. I think based on that, if you look at the recent shifts that have happened, the agreements are far more comprehensive. The India UK agreement, I think, has 14 chapters plus. It goes way beyond tariff focus. It goes into copyright law, it goes on to labor movement, continuation of FTAs if things don't work out or adjustments that are needed, continuous review mechanisms. So I think the comprehensiveness of the current is very important. And also, if you look at the last, say, 2, 3 agreements, there has been a shift in trade. In India, Australia, we've seen about 77% utilization. In India, UAE, trade has been growing at 15% plus CAGR since the FTA has been signed. So there are a lot of opportunities across the board, and we must leverage it and keep that going.
So, viewers, this is a very important comment by Anant Goenka, because I started my reporting life covering the WTO and the Commerce Ministry many years ago, and one of the biggest fears at that stage was about how Indian industry would be swamped by foreign imports, and we have seen 2 or 3 cycles. And while Anant mentioned a couple of economies, I would say that the ASEAN trade agreement has been very, very detrimental for India. And one of the qualitative differences is that now many of these agreements that are being negotiated are with the developed world, and therefore that difference that Anant Goenka highlighted is very, very significant. Anant, since we are talking about trade, I also want you to reflect on, as FICCI president, on the significance of the visit of the president of the Russian Federation. It's a state visit. It comes at a very fraught geopolitical time, and even as President Putin is prepping for his visit to India, we have US envoys in Moscow trying to work out the contours of a possible peace deal. What does the visit of President Putin mean for India, and particularly for future opportunities for Indian companies?
India-Russia is a time-tested relationship. We have stood by each other for a very long period of time. Our defense ties are very close, and that is a very strong, deep relationship over the years. On the business side, there is always more opportunity, and I think it's a space where we have not exploited it enough. There are sectors such as pharma, IT, heavy engineering. All of these segments, we can look at much more happening between the two nations. There is a large contingent of over 100 CEOs coming in from Russia. From our side as well, we will have a large representation, and we will explore and see that what can India sell into Russia and vice versa. And hopefully we will find some points of strengthening trade.
Do you think this will be a visit where we could see some forward movement and perhaps break new ground on labor exports, manpower exports to Russia? There have been some reports to that effect, Anand, and I wonder whether that is an additional dimension that we all should reflect on and remain hopeful for.
I agree. It's a great opportunity. Their population is a much smaller population than ours in comparison to their economy size. I think we have great skill and talent, and I think that's an excellent opportunity that we can look at. The only area we have to be cautious about, particularly on the IT side, is that most tech companies have a large exposure to the US, and to that extent, the risk of sanctions will always keep a little bit the companies on edge.
Absolutely. Again, a very important point mentioned, because many of our viewers may know this, but remember, Russia has been hit with 35,000 plus sanctions of all kinds, manner and form over the last 3 years, and it's extremely difficult for any company with any amount of international presence, and I would say even those companies that are based in India and export to be on the right side of these sanctions, because business is global. Anant, let's turn our focus inwards once again, and this is 2025. Deregulation has been the buzzword. We have seen recent moves. For example, the RBI, a new master circular that sort of consolidates and does away with a lot of the compliance burden in terms of circulars for the sector that it regulates. The SEBI and its chairman have promised and hinted towards similar steps. The government of India is also contemplating this. A very significant report on this is doing the rounds and will hopefully be decided upon soon. Do you think enough has happened on deregulation, and how hopeful are you that this will collectively make a difference to the animal spirits of Indian companies?
Yes, we've seen in our FICCI meetings with SEBI, with RBI, the consistent language has been on simplification, making life easier for corporates, making life easier from a regulatory point of view, and that's been music to our ears. Even now, the high-level task force on ease of doing business by the government is very welcome. We are continuously working with them on various areas of taxation, manufacturing, decriminalization, and all of this is very positive to spur Indian industry. The two big moves that happened, one was the budget reduction of the 12 lakh tax slab that got taken out in January, and the GST 2.0. I think that has put in 2.4 lakh crores in the hands of the consumer. And I think that should really spur Indian consumption and eventually increased utilization of factories and private consumption over time.
I want to ask you, what's your sense on the ground, and here I'm asking you to wear your hat in your individual corporate capacity, about the GST uptick continuing? There are some people who say, demand cannot remain at the same extent, but let's take the auto sector. Automobiles seem to be flying off the shelf. So is the GST-led uptick going to be sustainable?
Absolutely. As I shared, 2.4 lakh crore going into the hands of the consumer. There would have been maybe some waiting that would have happened before September 22nd. Then you had the festive season. So the kind of growth may not sustain at that level, but overall the level of growth will be higher than what has happened in the past. We've had demand as maybe the bane or the only challenge in the industry. I think that will be taken care of going forward.
Okay, if demand is going to be taken care of, what would you say on that question that's asked often of people like you, that private sector in India is not investing enough, that it is not creating fresh capacity, and the last 3-4 years private capex has lagged, particularly in contrast to government capex, that it's been left to the government of India to do the heavy lifting, whereas private companies are happier extending their margins?
I would in part agree to that. I think on the demand side, certainly that has been one area which has stopped capex from happening. But as I said, utilization levels are going up, and as post that, we will see some capex increasing. On the industry side, where I think we can do better is look at global markets. Look at understanding consumers in EU, looking at understanding consumers in US, making products for them, catering the entire range of products, whatever they need, branding, designing, packaging, all of that of a certain higher standard to suit international markets. And I think that is where Indian industry has fallen short, and we can do a lot more. If we do that and we make the world market our market, automatically India can be the factory of the world.
Okay, this year alone, income tax, you mentioned that, GST we all know, and the labor codes, which will come into effect from next April, but very clearly a very, very significant announcement. As an industry captain and FICCI president, what do you think remains to be done? What is left for the government to further deliver with all those big bang moves that it has taken earlier this year?
There are two recommendations that we would have. One is factors of production. They've taken care of labor to a certain extent, and logistics is continuously coming down with increased infrastructure spends. But on energy, more can be done. There's fair amount of cross subsidization that happens from industry to individuals. Use of renewable power is not consistent across states. Those are areas of benefit. Even land acquisition is the second area that we can work on towards making that easier, whether it is through industrial parks, plug and play. So these are certain opportunities from our side that we would recommend. Second is, while the center is very actively working on ease of doing business, there is not that kind of aggression across all states. So certain states, while they are very positive, very fast moving, I think states working along with the center would certainly be more welcome.
So therefore, what do you think is most critical? Because you've touched upon a very important facet of the Indian economy. It's not just the center alone, it's all our states. What will move the needle on the next leg of demand creation in your view?
As I said, I think some amount has to be done by industry. We have to think global. We have to enhance the quality of our products, and we have to make sure that we create demand by innovating more, investing more in R&D. If you look at FICCI's priorities itself this year is how do we take up manufacturing from 15-16% of GDP up to 25% GDP. To make that happen, we have four priorities. One is trade and supply chain security, leveraging FTAs, making sure we have supply chain resilience across the board. Secondly is R&D and innovation, taking our R&D spends from 0.7 to 1% plus. The third is ease of doing business, which we've touched upon. And the fourth is on manufacturing excellence, which is quality, sustainability, women-led development, and use of Industry 4.0 or digital technologies in manufacturing. With doing all of this, we feel fairly confident that our share of manufacturing can go up and it will spur demand in the industry.
Okay, as we wind down the conversation, I want to ask you also about the cost of capital. The Reserve Bank of India has also undertaken decisions. The Monetary Policy Committee has already lowered the cost of capital. What's your sense, since you spoke about inflation trending low, growth being higher, what would you as industry captain expect the MPC to do in the decision that it is going to announce very, very shortly?
I would recommend having a stance of continued focus on growth, which would mean some amount of rate cut, possibly a 25 basis points rate cut by RBI, is what industry's ask would be.
Okay. When the rupee falls, it cuts both ways. Exports have a positive impact, but those who are importers are not so happy. It's breached 90 for a variety of reasons. Is the rupee worrying you, or is it par for the course?
I think it's par for the course. It's something which is market forces are determining the value, and if exports become attractive, automatically there will be its own resistance on the rupee. I also believe that once the US agreement is signed, hopefully there will be some strengthening of the rupee also that would come in.
Okay, so viewers, whenever you toss a coin, whether it's on a cricket pitch or in other areas of life, there are two sides to it. It's your luck where it will fall. So whether you're an exporter or importer, it cuts both ways. But the rupee is the headline really, breaching 90 for a complex set of factors. But remember, if the rupee is breached 90, GDP in a quarter also crossed 8%. And there are very few economies in the world who can boast of that. Anant Goenka, any final words on this conversation before we wrap it up?
No, nothing else from my side. Thank you for having me, Siddharth. Really a pleasure speaking always.
Wonderful. Thanks so much. Viewers, that was a young industry captain who's taken over the reins for a year at one of India's oldest industry chambers, hopefully to push an agenda that will benefit everyone, including the Aam Aadmi. Thank you very much for your time. We'll be back after just a short break. Do stay tuned in to Business Today.
From how the markets move today to what's setting the stage for tomorrow.